Good morning, traders. It is Tuesday, the 19th of May, 2015. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. So important news overnight. ECB's Kerr stated that ECB is front-loading its QE purchases ahead of thin summer markets, causing a rapid drop in the euro-US dollar pair and a pop higher in European equities and bonds. Furthermore, ECB's Neuer said that the central bank would be willing to continue purchases beyond September 2016 if required. The 1-2 punch definitely gave equities something to rally for. In the European markets, the DAX jumped up, I think, a couple hundred points. The Reserve Bank of Australia minutes were largely dovish, stating that the delay in GDP pickup would lead to higher unemployment rate. UK inflation fell into negative territory for the first time since 1960. And in other news, we had Home Depot report 121 versus 115, and also beating its revenue projections. Walmart reported $1.03 versus $1.04, missing expectations. $114.8 billion versus 116.3 billion in revenue, also missing. And then just a half hour ago, April's housing starts in the U.S. came in at 1.135 million versus 1.015 million. This is the highest number since this is the highest it's been since November of 2007. Building permits came in at 1.143 versus 1.064. The housing market seeing a nice bump there. Looking ahead, there's really nothing on deck. Clean slate today. We have API crude inventories after the market closes at 3:35 Central, 4:35 Eastern. As far as speakers, we have the Bank of Canada Governor at 10:30 Central, ECB's Nowotny, who is a hawk, on a panel discussion at 11 Central, and then the Swiss National Bank's Vice President speaking in Geneva at 11 as well. That's really it for the economic releases today. Again, not much on deck. Let's look at the technical side of things. First, let's start off with this fundamental chart. Just to have a look at, since we made new all-time highs, just so we can have a look at how this is proceeding. This chart goes back to July 2011, this last low here, and overall, I think the low points when the index was at 1,074, and we followed this channel pretty much all the way up. We've been in this trend for quite some time. But with the new highs made yesterday, let's shift this over a little bit. New highs made yesterday, despite the movement that we saw, you can see that it's pretty much muted. The highs are being made very, very slowly. There isn't a quick run like we saw here, or here, or here. It's more of a grind up, hitting the center band of the channel as it climbs. New York Stock Exchange new 52-week highs were rising yesterday. We went up to 396. Sorry, not 396. We went up to down here to about 125 or so, and again, we're nowhere near a frenzied point like we've had in the past. Like I said, these runs here had some really strong support, whereas this particular run, you can see us making new highs, but on pretty muted underlying sectors. So I expect it to be pretty much a grind. The put-call ratio not in sell or buy territory. It's right in the middle of value, 1 standard deviation. This colored area here is 1 standard deviation of all the put call ratios that have been reported since July 2011. And then the bottom pane shows the 5 main sectors. These 5 sectors represent approximately 75% of the S&P 500. These sectors from top to bottom, healthcare being the key sector here, it has doubled in percentage, 110% since July of 2011. XLY represents the consumer discretionary, second strongest. XLK is the tech sector. XLF is the financial sector, and then in black, the XLI is the industrial portion. So you can see that they're all kind of the XLY, XLK, as well as the XLI are going sideways. XLV, the healthcare sector, is climbing slightly, and so is the tech sector, but nothing too radical here. Let's take a look at what we expected yesterday. Give me 1 second, please. Struggling with allergies here. Yesterday, given the type of high that was put in on Friday and where we were opening yesterday, the expectation was for it to be a choppy open. I was looking for a rotation down to start attacking 2113 and then potentially 2110. I also said that I do have some measured move targets above the 2120, which was at 2123 and 2129 and a quarter. We missed that by 2 ticks, but the inclination was for this to rotate lower. I had mentioned yesterday that also that the highs had been made by about 9 to 11 points in the past before there was a pullback, and it seemed like we weren't going to see that, but we did. It's just, as I said, my preference as a trader, as a day trader, is for this to test that prior high, which it did by a tick here, rotated down. This looked really good here once it tested the prior day by 1 tick, pulled back to mid, retest, got stuck inside of the prior day's range, expected it to rotate down. Even though this is a 2-tick Renko, I can fit the whole chart on one screen, which tells me that there wasn't very much action. That's the good thing about the Renkos. It just doesn't print a bar unless there's some movement. Same as tick or volume charts. But this rotation here looked like it was likely to start attacking the IB low and then start making its move towards 2113 as expected. It did not. Instead, it rotated up, and there was significant strength that came from actually the European markets. If we look at yesterday's, this spaghetti factory here looks like it's pretty crazy, but what this is showing is all of the underlying sectors that I monitor, underlying pieces that I monitor. And as we go back, you'll see here that the move up, so you can see that everything was sideways pretty much. XLF right here was a little bit in the lead. The transports, which are the orange, were sideways. But as we go into this session here, as we reach about 10:10 a.m. Chicago time, we see that the Euro stocks right here start taking a very strong lead with the DAX. New high alerts across the board, and that's when I alerted folks that to pay attention as Europe is turning higher. It looked like it was a news-based move, but I didn't see any news. But to see this market, which was sideways yesterday to down, suddenly take the lead and make and start pushing highs since the open. And then shortly thereafter, this dark blue line here, which was sideways, Shortly thereafter, the Russell started taking off, and then that's where we got our break to go higher. Again, I didn't see any news from Europe regarding Greece or anything that would lead the European market to suddenly pop up. But then later on, we found out that the Greece finance minister said that they're very close to a deal with creditors within a week. They will not sign a deal without debt restructuring. But again, the news initially that morning was that it looked pretty bad regarding the memo from the Greek Prime Minister saying that they're probably not going to be able to make the deadline for the payment to the IMF of June 5th. And that was holding the market down. And then with this news, the market turned up, and it all happened at the same time. Right here, this break is when we saw the European markets take a move, and then the U.S. markets followed. But mostly it was a grind up. I did not find good areas to get in here, long or short. It's just one of those days where I just couldn't do anything with this. It was a very quiet trade. So we left off with the market leaving this odd-shaped profile behind. Point of control near the highs. A pretty decent-looking high, but there's little taper to it. The profile is skewed to the upside. The expectation is for continued highs overnight, and that's what we got. We got 2134 overnight. So let's look at the overnight session real quick. Here it is, floating up higher into the Asian session, and then a quick pop on the ECB news on the overnight, along with the European markets. I'll show you what that looked like on the DAX, for example. Here it is. You can see here that after the U.S. Open, which is this blue line, this little blue line here, this dashed blue line. Hopefully, it's clear to you. If you don't have the YouTube screen maximized, it's difficult to see all this stuff. I suggest you maximize it by hitting that square at the bottom right corner. But you can see it's sideways. You can see it's sideways at the open, and then suddenly it starts to push higher here and into the close. Very strong close in the DAX, and then this morning after the cash open, we get the ECB news, and we have a strong pop-up covering the range here being about 200 points. The DAX up 210.5 points, 211 points from yesterday's close, trading at 11,812, or up 1.83%. Pretty important news there. We saw the same reaction in the Bund, and those of you who trade the Bund have probably seen some interesting roller coaster rides in there. Definitely some great volatility in there. Great product to have a look at if you do trade financial products. The overnight session, after pushing higher, sat sideways after that news, sat sideways and started to give a lot of this up. It's interesting. The market sold off on that housing number. It's hard to predict what the market's going to respond to and how, because the strong housing starts number is again a catalyst or an impetus for the Fed to raise rates sooner rather than later. Rates would immediately impact the housing markets, and if the housing market's as strong as it's came out to be this morning, again, highest number since November of 2007, the market's responding by selling that news in anticipation of what probably in anticipation of what the Fed is likely to do. A quick look at the projected targets, since we are in a rally market here. Looking at since we don't have any volume or any history up here, I have to fall back on projected measured moves, and I want to point out this area right here. There's a strong cluster of multiple projections on this chart, starting at 2169.75 and going up to 2174.75. This is a key area. I have 4 projected lines there. There are actually 6 two I'm not showing. They're on a different chart, but there are multiple projected values here at the 2170 to 2174 area. This area is very important to note on your chart. We don't see confluence like that very often, but it is a strong cluster. Of course, we're trading 2127 right now, so we're about 50 points away, 42, 43 points away right now, but it's an important area to note. The next big level up is 2140 and then 2150, which coincides with those round figures and option strike prices. But overall, I'd like you to note 2170 to 2175 as key areas. This morning, we're opening right up against the upper end of the range. The expectation this morning is more likely than not to retest this overnight, retrace and retest some of this overnight move. The inventory from yesterday, the overnight inventory, is likely to be balanced, so it's likely to be a choppy open. But overall, I expect this 2128.75 to be tackled. Again, I have a target of 2129.25, just 2 ticks above yesterday's high. I expect the high to be tackled probably, but I'm expecting today to probably play out in the middle of yesterday's range. This is just a guess. I have nothing here, and I'll be the first to admit it, I have nothing here that gives me a decent probability, or a probability that is clearly advantageous to one side or another. I just don't. I have to go with what the trend shows. The structure that we left behind is not so great. I anticipate, some repair below 2120 is a key area to test now, along with 2113 and 2110. But overall, I have to continue with the theme of this continuing higher. But I see this. There's a pretty good delta yesterday on the buy side. A lot of that was taken back. There was the inventory yesterday. By the time the market closed, the inventory imbalance on the participants was on the long side, so you could see the inventory balancing out. See this strong delta sell here. Very big number, 22,000 to 6,300, meaning about 16,000 more contracts sold on this bar than bought. 16,000 more sold than bought on the close, which tells me that the inventory was very long going into the close, and it balanced out on the last cash market bar. So I expect more of the same today. I expect that even if it pushes higher, that it's likely to rotate down and start moving towards the 2120, and that's we'll wait and see how that plays out. A quick look at the crude oil, just to continue the story. Crude oil still taking its pullback, still trading within this balance zone here from way back, and I do expect it to continue higher. It has hit a pretty big pullback level of about 50% in the 62 area, and is pulling back. But overall, this is shaping up to get into and take back some of this thin volume zone above. Right now, crude oil is selling off a little bit, but the corrective phase of this is still incomplete, in my opinion, and it's likely to turn and go higher yet still. But for now, it is having a pullback. Overall, that's all I have for you. Best of luck today. Hopefully you find this useful. Again, we're at all-time highs. We don't see this often. It's being at all-time highs is not in and of itself a reason to sell. We need to see the market make a high, make a good strong high, pull back, attempt to take that strong high, fail, and then we'll likely to see the market rotating and then testing the areas discussed, 1550, 2113, 2110, all the way down to 2074 before the next push. Good luck to you today. Take care.